Whether you know it or not, chances are you've got significant investments in UK assets, or companies at least, that have got UK denominated assets in sterling. Short-term market volatility, medium to longer-term uncertainty could affect the value of both UK-focused shares and, of course, the value of the pound itself. According to research from the University of North West, Britain's possible departure from the European Union could shave about 0.1 of a percentage point off South Africa's economic growth, which would technically almost push us into recession. That's how tight things are here. We've got very strong trade ties with the UK and the European Union. In news today, George Soros saying the vote to leave would trigger a bigger and more disruptive sterling devaluation than the fall on Black Wednesday in the 1990s. This is the Moneymakers. I'm Bruce Whitfield, and tonight we look at the costs to the European Union and to the United Kingdom, but also to us on the southern tip of Africa, and who stands to lose what. I'm joined from our Cape Town studio, Ryan Ravens, Chief Executive of Accelerate, and in Johannesburg, Sasha Naryshkine, who is a Director at Vestact. Ryan Ravens, you represent the 50 biggest corporates in this region, many of which have got operations, businesses, subsidiaries, colleagues living and working in the United Kingdom. Just how tight a vote do you think it's going to be this week?
Personally, I think it's a muchness over nothing, to be honest. I think ultimately reason will prevail in the UK, and the vote will be to remain within the European Union. Obviously, the uptick in nationalist sentiment and the anti-immigration sentiment that's sort of driving the leave perspective has died down a little bit with the recent tragedy and murder of Joe Cox. But ultimately I'm optimistic that reason will prevail and they'll remain within the EU.
Reason will prevail, Sasha Naryshkine. I think you're probably in that same boat. I certainly feel that British voters know which side their European butter comes from.
It's called the Bremain part.
The Bremain.
Bremain, rather than the Brexit.
Yes.
Now look, the bookmakers have had this for the last 2 weeks at like a 73% Remain and a 30% Leave.
But the polls are telling us something different.
Yeah, well, just remind me how the Scottish polls went.
Yeah, exactly.
And the polls were so close in the last general elections in the UK that apparently Cameron had penned a resignation speech already. So, maybe polls are just tired, bored people who are either very left or very right of centre and are willing to partake. Ryan raised a very interesting point about nationalism. I mean, the way I see it, so you colonize the world for 200 years, you push your culture upon them, but then you don't want them to come live in a culture that you pushed upon them. Isn't that a bit dumb, Bruce?
Yeah, no, it is most certainly dumb, and that's one of the great ironies, of course, of this entire debate. Ryan, when it comes to companies, though, doing business in the United Kingdom, there has been enough concern to see a sell-off in the pound, to see a sell-off of UK-held companies. This week, things have turned around quite substantially, and the sanity will prevail argument holds very nicely indeed. Britain remains then, let's argue, within the European Union. Do we see things continue as they always have, or is this a seminal moment, maybe a change in tone perhaps for the European Union as a whole?
Yeah, I mean, obviously we would hope that it returns to business as usual. Volatility, uncertainty are never good for emerging markets like South Africa. And obviously, if Brexit were to happen, the short-term impact on currency would massively hurt some of the dual-listed companies, the likes of SAB, BAT, some of the property-listed companies. Obviously that would be detrimental. But if we remain, I think it brings an element of stability back into the picture, reduces some of the volatility, and that obviously is a good thing for us as emerging markets.
Yeah, I mean, we've seen the currency, Sasha, in recent times.
What might actually happen if there is an exit vote is that all emerging market currencies might sell off in sympathy across the globe. So as much as George Soros, and bless him, I mean, the man is worth
He'll get it right again one day.
Well, he's worth $25 billion, I think, at Forbes's last count. So he's done exceptionally well for himself. But everyone remembers him for that one moment, right, Bruce? I'm sure. And he has called big market moves before. A guy called Cullen Roche, who's from Pragmatic Capitalism. Go and have a look at his blog, pragcap.com. Josh Brown, he's very colourful on Twitter, the reformed broker. Go and look what he said about Soros. He said while he's writing this, Soros might have changed his mind already, and that was 10 days ago. So, Soros is, and lots of traders make big calls a lot of the times, and we're all blind here. For all we know, last week he might have closed out, made good money and gone long while he was talking it on the way down, trying to get a cheaper entry price. We don't know that.
No, we have absolutely no idea. But look, let's look at the potential consequences of an exit from the European Union from a South African asset point of view. If you or somebody with
London houses will get so cheap, but we still can't afford them.
Exactly, because our currency will weaken even further. But when it comes to the likes of an Old Mutual and an Investec and Anglo-American, which is headquartered there, and SAB, Mediclinic, all of these companies which have gone into the UK market, a short-term blip at worst, surely.
Remember, SAB Miller unlikely because there's a ceiling there, so it would just be a currency translation thing. I guess positive for AB InBev, right?
It would be.
It would be, because it would mean that ultimately at the end they'd be paying a few less dollars. So maybe there's an opportunity in AB InBev in the very short term. But what we've seen in the last couple of days, a reversal in the weakness in the pound, leads in nicely from what Ryan and I have been kind of predicting all along.
Okay, Ryan, let's look at it from a bigger perspective, because I think we're all agreed around the table and across the airwaves all the way to Cape Town that the Remain vote is going to dominate on the day, and Britain will not leave the European Union. But what we have seen in the last 3 or 4 years is a very fragile European Union. First was Grexit, and then Crexit, and then Mexit, and then everybody wants to have a vote as to whether or not to stay or go. Britain's the big one. If it decides to stay, it should strengthen the union for longer, or not?
Absolutely. Let's hope so. I mean, one of the massive and potential biggest dangers of a Brexit would be other countries doing the same. And, where does that rabbit hole end? So it could potentially be a significant risk for the entire Eurozone and the entire voting bloc. So, certainly the opposite is then true. If they choose to remain, we trust and hope that will bring stability, and that would reinforce the commitment not only to economic principles but also to the ideologies that are held within the European Union, and that includes human rights, labour laws, and such like. So it's absolutely critical that the European Union remains intact and stable for as long as possible.
From a South African perspective, most of the plums, the apples and other fruits that we produce, I think it's satsumas or miniolas or something like that, the easy peel fruits,
as Wooly calls them,
that we export to the European Union are consumed in the United Kingdom. It's terribly convenient for us as an emerging market to negotiate with one trading bloc rather than with 30 countries and disparate trading blocs as we used to in the olden days.
Look, as far as I understand it, to remain inside of the trading zone, which is what most people want, the rules wouldn't change all that much. So this is more a kind of, are you in or out as a bigot? But I mean, it's quite interesting what the kind of the far right say. No, I don't say that, but that's what our voters say for. But I think you're right, Bruce. At the end of the day, we need a strong area, because collectively as an economy they're bigger than the
China.
US.
Yeah,
they're bigger than the US.
And more important to us than China as a trading partner as well.
Ultimately, because they're rich consumers. So China will go down that path, and we're seeing structural changes to suggest that. But you're right. I mean, we need a stronger... I think the financial crisis came at a very bad time for the European Union, because there was this lovely honeymoon where the economies of all the big nations across Europe grew quickly, and suddenly we've been stuck in a 4 or 5 year pattern with very low to no growth, luckily no inflation to speak of, and then all these nationalist agendas that have come to the fore rather than being common Europeans. Everyone will always have their agenda, and we just hope poor Cristiano Ronaldo can score a goal.
And look, it's the big stuff that matters, Ryan, ultimately. But the world is a better place. It's more stable economically, it's more stable politically, it's more secure, surely, with a strong European Union rather than a fractured one.
Absolutely. And, it's For me personally, what's really concerning is the growing sentiment towards nationalisation. I mean, this goes counter to everything. Certainly, we as South Africans hold dear. Diversity, incorporating various cultures, and all of the benefits that brings. So it's a little bit concerning to see this level of nationalism and nationalist sentiment growing. But absolutely right. I mean, a strong European Union is good for all of us, and something we desperately need at this stage. But Sasha, I have to say, I'm not sure there is ever a good time for a financial crisis. Yeah.
No, I don't think there is, but in the life cycle of the European Union, perhaps, as Sasha was talking about. But there is the swing to the right. We have seen Marine Le Pen and the National Front in France dominate. We saw
remember
Austria,
her dad was in that camp too.
Completely, but Austria also came very, very close to having a far-right government. But when I was chatting, let me name drop just for a moment. David Blunkett, ex-Home Secretary in the United Kingdom, chatted to him as the financial crisis was breaking. I said, what's the long-term consequence of this financial crisis? And he said, inevitably, a swing to the right in Europe.
New mayor of Rome.
Yeah.
From the five-star, what is it? But mind you, they've got a different kind of mandate, but one of it is kind of far right. UKIP in the UK themselves in the last election. I think what's the upshot of it all is that a return to growth will reduce the screaming voices on the left and right. And the good news is that we're through the worst of the crisis, and the European Central Bank, regardless of what you think, whether it's right or wrong, is doing a lot to support the recovery in Europe. So perhaps an economic recovery where everybody in the middle starts feeling good about themselves again lends better towards the middle road than the right or the left.
Europe has gone through the longest unbroken period of peace in history, probably.
Which is the reason why the Union was formed in the first place.
It's got to survive.
Yes, it has to, for peace, stability. Lest we forget, Russia's on the doorstep and they haven't been very friendly either.
But is it not inevitable that it will break up one day, considering all of the pressures?
No, because I think the people in want to be in. The freedom of movement and trade and goods. I mean, I don't even think they've scratched the surface in terms of, people in Germany eating chorizo, or the people in, Portugal eating the best bratwurst.
There we go. And we'll leave it there. But
sausages.
Anybody who travelled around Europe in the 70s or the 1980s, and as a South African you had to go and queue at embassies to get yourself 1,000 visas to cross borders, understands the magic and the joy that is the Schengen visa. And that is just a tiny part, of course, of the huge advantage that is in the European Union. But British citizens go to the polls to vote. The pollsters will tell us that it's neck and neck. The bookmakers, and those are the guys that Sasha relies on, have been telling us for weeks that 3/4 of Brits want to stay in. We'll know by Friday. Thank you to Ryan Ravens, Chief Executive of Accelerate in our Cape Town studio, and in Johannesburg with me, Sasha Naryshkine, Director at Vestact. More issues, more economic issues, more politics, and more thorny discussions to be had on the MoneyMakers next time. Till then, bye-bye.